It's the Market Sniper, Francis Hunt. Yes, please don't forget, hit that like button right now. It does me a favor if I've done you a favor. Hit it now. Give us a share to your favorite social media. So what are we talking about? The USD dollar JPY. We did a video on our YouTube channel when it was half the way through. And before that, inside our community, obviously, we'd prepared with the setup and why it was a setup, why it was at our macro 136 level and potentially winding up for the next move up. And then on our Friday last week, live trading day, you can attend these for no more than $197, by the way. And we normally, just before the first Friday of the month, we'll have a live stream and we'll make the link available for you to just pop in and see what are we talking about. This is a great way to try before you buy, before going to themarketsniper.com, booking a call to talk to a trader like you who is a member of our community. We don't hire professional salespeople. There is no hard sales. You can have a discussion with someone just like you, how HVF method has worked for them, and be shown our platforms and our structures. Anyway, the USDJPY. As you probably know, there were some interesting numbers that came out, which included the CPI, which once again showed that inflation is a monster, best killed small. Once it's big, it doesn't go away very easy. You just simply don't put it away nearly as easy as you think. There's people calling peak numbers again, and I think they will be in trouble again. But nonetheless, there was two major data events. This also covers a massive bugbear that I have with many people that go, it's the news that moves the markets. Technical analysis is based around the news. It is the same coin. It's the other side of the same coin. Essentially, this trade has functioned between two core news events. What happened? First of all, we had on our live trading day, which is one of the reasons why we put it on the non-farm payrolls day, first Friday of the month, is that there's often triggering events. This is phraseology unique to HVF method that highlights when structures, and that was the candle for the non-farm payroll break day, are likely to trigger in new directions. So often a market is winding up, gestating, consolidating, thinks it might want to go up, but needs a nudge. This is typical, the nudge, and not to be confused with nudge politics and manipulation, a la the Bernays structure, but nudge often is a data event. The nudge came in a stronger than expected, and we guessed that accurately, not because we're smart and we have statistics, but because the technical analysis was suggesting to us this should be an upside break. So we reverse engineer the likely news for the technical expectation we have. In other words, we don't think like everybody else. We are not narrative driven. We are genuinely technical traders. Many people look at charts, but they are still narrative driven. They are, as I continue to say, a disappointing lack of macro technical analysts that make technical decisions and wait for the news to then come that validates why. Most of them are news driven. So this particular non-farm payroll triggered our structure. Now, we were showing this inside the community, and this is what you wouldn't have seen if you're not a community member, the structures that we were observing. So if we just shuffle over to the Twitter feed, for example, I illustrated the original observation that we were highlighting and discussing inside the community around this gestating. At that point, you could have still purchased into this possible trade on an early, where we were already expecting north of 138 as a move around about the 135s, 135.8s, 135.7s level. That was the original draw as we were discussing this inside our community that can be demonstrated when you book a call. What has happened subsequently? Well, we've looked at the live chart already, and you'll know that that has panned out quite well. But what's important to recognize is that the RRRs, that is the risk-reward ratio, had you done a partial close. And remember, this trade was a perfect opportunity for all the people that said, I wish I'd got dollar long against the yen. I've missed it. It's all over. We said, A, it isn't all over. B, there is a low risk way that you can break into this macro trade move that we anticipate will still go a substantial way further and lock in some profit and shore up and build up your margin level on your account so that you can work your way into a trade. You don't always arrive on time for the macro move. However, there are mechanisms utilizing HVF method where you could get in. At the time of the live trading day, where we had a number of visitors, which was usually very well supported, it pulled back as we were starting the crypto session. And as we discussed it, you could have got in at the 136.2. That is at this level over here. Let's just grab the TG pink arrow. There it was roughly. So we were still on the Friday. We were starting the crypto session after a half-hour break, and then you had a little bit of messing about and pulling back in, and we highlighted you could optimize on the basis that the triggering event candle is usually a very dominant candle, and it is backed by volume because it is news driven. So an optimized stop that gives you a better risk to reward ratio. However, you obviously are taking a little bit more of a chance. You're having less room for things to go against you. However, given that it was a news-driven event with substantial volume, you have a reasonable likelihood that it would stand. Hence why we optimized the stop instead of being down there to being up here. Subsequently, as you can see, you actually got quite a substantial pullback during this phase. So even after we did an update YouTube, after running the second interim, where we warned, again, the method tells you after running a certain level, you may top out for a bit and have adverse price behavior. First initial reaction pushes marginally higher, and then a stale out period with quite a reasonable pullback. If you're sitting watching your P&L, you think, oh my God, he's wrong, I'm not making money, help, ouch, close, take what I can, lock in my 1 unit of profit, roughly 1 unit to your stop, and you jump out at the bottom, and you leave the 6.54, or in actual fact, in the current market conditions, around 8.4. It could even be higher. We'll go to the live chart now. Now, if you had closed partially that trade at the target, you now have taken your small account that had $1,000 in it. You had your couple of units. You now have a slightly bigger account, and you still have a half position, and you have broken into a macro dollar dominance trade. And that profit can be such that you could have a stop all the way back down here as an example on the localized low after the stale out of the non-farm payroll news. So this was largely news driven strength. Pullback first test at the second interim, and then a harder test. Boom, 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 bosh, full pullback in between the data. Then we come to CPI number, that is Wednesday, and you get a new surge that runs you home, and you're already into over performance. Squeezy, that Japanesey. That is the video, by the way, and we did that at the interim level, and we warned you at that point on this video, having run that you could likely have adverse feedback events. So if you were already in the trade, your P&L would go down. I know traders watch their P&L. They shouldn't. They should watch the charts, but they will watch their P&L. And that actually was also an opportunity. Even if you had missed this second opportunity to break in the trade, you could have, if you had had the confidence in the method, which you wouldn't have because you haven't gone through the learning or the program or the course, you could have seen that pullback and got in somewhere over here, and you would now be somewhere over there, and you could now have a stop level for breaking in during that stale out period. How many methods do you know where interim targets, where you could likely get pullbacks, are being flagged on the way to a larger target that you can still expect overperformance to, with overperformance measurements on how to close an overperformance trade taught in our content on themarketsniper.com when you book a call. I don't blog trades like this very, very often. This is premium content for our community members. This is an example of what you get. You've got to respect the years of experience, the method, and the process, and you have to submit to process and stop staring at P&Ls. And you can realize that the market actually loves you When you trade traditionally, you think the market hates you. It looks like it always perfectly comes down to fill all your stops. I lived that. I lived it for many years until instead of emotionally responding to momentum, I decided to submit to process. Suddenly, I was getting out at localized highs and getting in at localized lows and grabbing and catching fast-moving price behavior that explodes promptly, quickly away from my entries and having tight stops. Right now, this trade, if we pivot to the chart, is now currently at a level where the market is there. You're in and around from your original entry, if I drag it down to that point, about 8.26 Rs that you've made. On the half position that you've not closed, had you done that, it's quite safe for you to now move that stop, for example, despite that entry beyond that level and bring it up to just below that localized low and have a realistic chance of now holding a long-term hold that you could over-performance manage if you have the techniques and the skills that HVF method will teach you. You're learnable on themarketsniper.com. This is how we build wealth. Trading, the reset-based events where the FX markets have become the new crypto markets. Ignore the peak inflation callers. They're going to be continually wrong, continually calling tops. The Fed is going to be determined to do its damnedest to maintain a very dominant dollar whilst it is under the threat of all the new systems as created by their own confiscation of Russian funds and the deglobalizing that the Russia-Ukraine war has done, the BRICS nation and many other things. We are in that process where the tussle is deeply occurring between the legacy and the new powers that are accumulating. That is a more geopolitical statement. This is meant to be a technical video, so I will say no more. You are sitting on 8.41. You have now seen the yen trade from 138. It's very important for those that are only viewing this particular trade, which is on quite a low time frame, to not forget that in this entire process, we were warning long before all the mega dollar bulls came that you were going to have a dollar bull period, and you could actually have ridden this trade, fine people, entering in and around the 110 levels, or in the funnel periods anywhere as low as 107s, all the way up to this 138. In short, in a financial majors, US dollar versus probably the third most significant global Western-friendly currency nation, the Japanese yen, have witnessed in a very short space of time, well in excess of 30% devaluation that you could have held and traded through with many points had you arrived late, where you too could have been supported and broken into the trade. Such was illustrated here as well in a wind-up. Also shown to my community for those that had recently joined that could have entered in and around the 116 levels and have been in overperformance ever since. This is the value of wealth building in reset times. You need to do it, as I said in the Matt Letitia videos, or as Matt, my apologies, said in the videos. He can say no because he can afford to say no to those that insist he wears BLM and stickers to their work. And he can get fired because he does not rely on them for his daily bread and can find work. Wealth gives you power to buy some degree of freedom. Building wealth in reset times should be everybody's core priority, and the virtue or the nature of the destruction they have to bring down on the old to implement and force and coerce everyone who has an inertia onto the new is going to give opportunities. Every dark cloud has a silver lining. There's beautiful balance in this world for the wake. And unfortunately, the speculators and those that understand the game are the ones that will get wealthy. Not the nurses, not the teachers, not the engineers. Do you understand the greater game? There is real wealth building opportunities for those that wish to find out more and want to be on the right side of the USDJPY. Wanted to be calling the dollar index likely to bottom at 89 now that everybody is claim stake jumping us with 150s and 200s who have arrived late and don't even yet have a dollar long trade on. Go to themarketsniper.com, book a call. You too can learn how you can apply HVF method to build wealth in these crazy times. The opportunities will be huge, and the destruction of the old system for the new is the great game. Thank you very much for watching. Shares are appreciated. Hit the like button if you found some value. This is a short update meant to be easily consumable for the many. Bye for now.